The European Central Bank has kept its key policy rate unchanged at 1%, in line with what the markets were expecting. But the central bank disappointed investors who were expecting that it would announce another infusion of liquidity into the markets by way of another long-term refinancing operation. The markets, however, are sticking with their expectation that the ECB will have little choice but to cut rates at its next meeting in July. The central bank has revised its growth projections for 2013 downwards from 0 to 2.2% to 0 to 2%. The ECB also revised inflation projections for 2013 upwards to a level of 1% to 2.2%. At the press conference, ECB President Mario Draghi stated that growth remains weak and the European Union would see increased downside economic risks in the form of market tensions and unemployment.
Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. While inflation rates are likely to stay above 2% for the remainder of 2012, over the policy-relevant horizon, we expect price developments to remain in line with price stability. Consistent with this picture, the underlying pace of monetary expansion remains subdued. Inflation expectations for the euro area economy continue to be firmly anchored, in line with our aim of maintaining inflation rates below but close to 2% over the medium term. At the same time, economic growth in the euro area remains weak, with heightened uncertainty weighing on confidence and sentiment, giving rise to increased downside risks to the economic outlook. In previous months, we have implemented both standard and non-standard monetary policy measures. This combination of measures has supported the transmission of our monetary policy. Today, we have decided to continue conducting our main refinancing operations at fixed-rate tender procedures with full allotment for as long as necessary and at least until the end of the 12th maintenance period of 2012 on 15th January 2013. Looking ahead, it's essential for banks to continue to strengthen their resilience further. The soundness of banks' balance sheets will be a key factor in facilitating both an appropriate provision of credit to the economy and the normalization of all funding channels. To sum up, the economic analysis indicates that price developments should remain in line with price stability over the medium term. A cross-check with the signals from the monetary analysis confirms this picture. In several euro area countries, excessive imbalances exist, and they need to be corrected. To this extent, comprehensive product, labor, and financial sector reforms will help foster sustainable growth.